Hey guys, how you all doing? I believe you're all having a beautiful day. Guys, I have a good news for you guys. Very good news. Now, you all know about my Ghost Eye strategy. You know it's been sold for $300. But guess what, guys? I'm giving it out the giveaway for 10 people, guys. 10 people. I'm going to sell this strategy for $50, guys. $50. You've all seen the videos. You've seen the amounts I've made with this strategy. I've made from $100 to $1,000. From was it $20 which day to $1,000. It's, you know how profitable it is, guys. So like I said, for 10 people, okay, $50. Get it now while this offer lasts. It's not going to last for a very long time, believe me. Get it now while it lasts. Now I'm going to tell you how I'm doing this. First of all, you all know the aim of this channel is to help everyone get money. Like, it's the primary focus of this channel. I would say for a while, about 7 years ago, before I got to know about forex, it was really hard, guys. Things has been really hard. So I can say I appeal to whatever you're feeling now, your clients. I know how things are, and this is me trying to help, trying to give back to the community, because this strategy has given me much that I needed. Even before I started YouTube, that's given me much money that I could ever think of. Now this is like my way of giving back to the community. So I would like you to send me a message now on Telegram or WhatsApp to get this strategy. $50, guys. And this is going to be a long video. Believe me, this is going to be a long video, a 2 hours video. And within these 2 hour videos, I'm going to place Easter eggs, guys. I'm going to place 5 Easter eggs in this video. 5 emojis. Now what's going to happen is, if you can find these emojis and send these 5 emojis to me, I'm going to fund your account, guys. $10 each. $10. Now what I'm funding this account is, I want you to grow this account with this strategy. Grow this account to $100. It's very possible. I mean, I'm giving you the money, so basically you have nothing to lose, guys. Nothing to lose. So watch this video to the end. Find these emojis. I'm going to fund your account. Find these 5 emojis. I'm going to fund your account $10, guys. $10 each. Still for 10 persons. So that's like $100 giveaway. First, I'm giving out this strategy for $50. Get it, then I'm going to fund your account for $10. Just find this emoji and send it to me. This particular emoji here, yes, this emoji. Find it and send it to me. I'm going to fund your account $10. Like, you've all seen the testimonies from this strategy. You all see, you know it's working. You know it's working. Should I explain? You know it's working. I don't need to go back saying lots of gibberish about it. You know it's working. Like, let me show you something. I've always talked about my 300 moving average and what you should do whenever you're placing a trade close to it. So what happened there? This trade was going close to it. It spiked. It was coming back close to it and it spiked. Look at this one that passed. How many candles? It spiked. Now if you have my trading plan, you'll know what I said about the 300 moving average. Whenever a trade is going towards the 300 moving average, exceed that trade. Look, we are not here to gamble with our money, guys. We are not here to gamble with our money. You're not here to lose your money. You're not here to do try and error 50-50. No, guys, we're here to make money. We're not here to make losses. We are here to make money. So if you know you're entering the wrong trade and you feel, or you know this thing is gonna work out, it's more like a 50-50%, you're not sure, I'd advise you leave that trade. Come, we have a better signal with better confirmations on better situations, guys. Like I said, my trading plan, you also need it. It comes with the strategy. Get it for $50 and I'm giving it to you guys. $50. It's not going to last for a long time, believe me. The first 10% getting it and that's sold. 10%, oh my god, are you guys kidding me? The first 10% getting it and that's sold. And like I said, if you get it $50, I'm going to fund your account $10. You have nothing to lose, guys. Nothing to lose. Get the strategy and I'm going to fund you $10. As simple as that. I want you to build your account. I want you guys to make money passively. Very simple. Do you understand it? I don't want you to suffer looking at the charts all day. Like, this bot gives you 85% accuracy and my trading plan covers that with 14%, guys. 85 plus 14, that's 99, guys. You're not going to get anything better anywhere, believe me. You're not going to get anything better than this anywhere on YouTube or whatever. No, I know people always say there's nothing like a holy grail strategy, but believe me, this is the best. I've been trading for over 7 years and now, like can tell you this is the best for now, because with time things get better. Believe me, with time things get better. You've seen the videos, you've seen my winnings. They are not just pictures. You've seen videos. You can see someone formulated pictures, but these are videos. Live trading, guys. Live trading. Come on, guys. Nothing can beat this. So watch this video to the end. I'd advise you watch this video to the end. Find these emojis. Find these emojis and send them to me. 5 emojis throughout this video. I'm going to place them on some places. So if you skip the video, you might skip it. I'm going to fund your account $10. Look at, just find these 5 emojis, send to me. I'm going to fund your account. You don't need to get a strategy. Do you understand? You don't need to get the strategy, but it's more or less an added bonus. Find these emojis. I'm going to fund your account $10, guys. $10. Like I said, it's more or less a giveaway. I'm giving back to the community after making so much with this strategy. I want to help others make this money. You have nothing to lose, guys. Send me a message on WhatsApp, join my Telegram channel, send me a message on Telegram, send me this Easter eggs, and I'm going to fund your account. As simple as that, guys. As simple as that. Make sure you watch the video to the end. Watch it to the end, so you're not going to skip anything. I have lots cooked up in this video. Somewhere in this video, I'm also going to give a lesson on candlesticks, guys, because I understand most traders do not see the need for it, but believe me, it's very much needed. Like, see this toggle here, this option, manual trading, is predominantly focused on candlestick and price action patterns. Now if you click manual trading and you do not know candlestick pattern, my guy, you're gonna lose them. You're gonna lose that market. You're gonna lose that trade. Do you understand it? You need to understand price action, technical analysis to be a better trader. Yes, I understand this robot gives you signal, perfect signals, 80% signals and all that. But as a trader, you're not supposed to be dependent on a particular thing. You're supposed to be versatile in your skill. And that's the essence of learning candlestick patterns and price actions. Watch the video to the end and send it to me. And if you're new to the channel, do not forget to subscribe, leave your notification bell turned on, and leave a comment below telling me you're new. I'd like to message you and add you to my Telegram channel, okay? I post free signals on my Telegram channels every day, guys. Free signals every day, as much as 5 candles to 8 candles per day, guys. 8 candles per day. Just come to my channel, test out my work. If it doesn't work out for you, then you can leave. But give it the benefit of doubt. Give it a trial first. If it doesn't work out for you, then you leave. Go there, you can see all my messages. It's not formulated, guys. Live signal. Hey guys, how you all doing? Now I want to show you something very simple and beautiful. Now this is a bot. With this bot, you can make passively as much as $10 per day. I can see it was based on certain parameters and codes, so it's not something you can see you place manually. That's why I have to show you that. Now I used this about 2 or 3 years ago. It's more or less for those that are scalping. That's why I'm giving it out, and it's gonna be a giveaway for free, guys. Nothing, not gonna pay me anything. You're gonna backtest it. I actually have 2 bots. I have the one you could backtest, and I have the one for premium users. That one's it's very cheap, $50, very cheap. But this one I'm gonna give you guys free, guys, free, a giveaway price, nothing, zero. Just chat me up on Telegram or WhatsApp, and I'll give you this bot. Now this bot, as you can see my trades here, see the winning trades. Now like I said, this is the free bot, this is not the premium bot. But with these free bots, just see the trade. See the trade I placed. 13 trades. I can see 14 contracts won and only 1 lost. This is just for the free version. Imagine how good the VIP version is going to be, the premium version is going to be. Now like I said, you can use these bots passively, in the sense that if you are to work and you're quite busy, you don't want to be looking at the market daily, use this bot. Look, it was trading on volatility 100. Like, this is accurate, guys, very accurate. And you can do this passively, guys. You do not need to go to the market daily. Just plug it on your phone and let it be. Just plug it on your phone and let it run. It can run for a whole day, but I wouldn't advise that, but it can run for a whole day, guys, a whole day, believe me. And it's very easy to install, very easy to use, very easy to install, and the profits are above 80% accuracy, guys. But you'll be asking, how are you going to place this trade? How is it going to happen? I'm going to show you, okay? So guys, just click this these 3 lines over here. So what's going to happen is, normally you're going to be in D trader, you understand? So we have D trader, we have the bot, and DMT5. Where you're going to click is the bot, automated trading, as a finger tip. No coding needed, because I've already done all for you guys. Click here. Now it's gonna load up, and now the good thing about this bot is you can even try it on a demo account. As simple, guys, you can try this on a demo account. Now this is how you load in the bots. You click this this drop down arrow over here. This arrow, once you click this, it's gonna give you all this. What you're gonna do, you click on load over here. Click on load. Then I believe you've gotten the bot for me already. Select an XML file from your phone. Click on that. Then you see the bot I'm going to give you right now. The one I'm using is chaos derived debot. You understand? You click on that, and next thing you're going to do is click on open. Very easy, guys, very easy. Then you close this, then start running it. Very easy, very easy. Like I said, with this bot you can make as much as $10 to $20 per day. It's a scalping bot. You use it what's it called, you use it when you're scalping the market. So when you want to make trade passively, you don't look at the charts, you just want to press and play. You see how easy it was to install it. These are the parameters. And now there's a parameter about this bot that I like, that some people might not like. It's called the Martingale strategy. Now I understand it's not in English, you understand. The main bot is being translated to English, so do not worry about this. Now the Martingale strategy, I don't know if you've heard about it, but this is how it is. If you place a trade with $2 and you lose that trade, it's going to multiply your initial amount by 2. You're just going to double it. So you lost $2, you're going to double it to $4. So now your profit is going to cover your previous loss, and you're going to have an added profit on top. Excuse me. Now some persons might not like the Martingale strategy because they think it's more of, it has a gambler tendency, and they're right. Like, yes, it is, but if you use it with a trading plan and stipulated rules, you will never lose with it, because there's no way my robots can lose 4 times in a row. That's impossible, guys. Now the good thing about Martingale strategy is, if you lose one, you lose the second one. Oh, if you get a third one, believe me, it's going to cover for all your losses. It's as good as that. It's going to cover for all your losses, all the losses you've lost, and all that. But like I said, it's something you can toggle off and on. As you can see it here, you want to click this, you can toggle it off on. You can toggle it off or on. You can impute the numbers. Yeah, like how much you want it to multiply by. Do you want to multiply by 2 or by 4, whichever? Just impute that. Very easy, guys, very easy. So once you've installed all this, the next thing you just do is click on run, and the bot starts running. Very easy. Like, you can do this and keep your phone, go out, come back, and it's made profit for you guys. Simple as that. Like, you can try this as with a small account, even like $10, guys. $10. So this is first bot. This is not my bot, by the way. This is this is my bot. So this is Martingale strategy working. So you doubled the amount, so you made your $2 back and $74. As simple as that, guys. Very simple. And you can test it out on a demo account if you want to. You can test it out on a real account. But believe me when I say it works, because I've used it before I stumbled upon my course strategy and made it perfect. So I'm going to stop this right now, at least you know we've made this money. Like I said, you can just play this and go out, come back in the next 2-3 hours and see the profit that's giving you guys. This, I'm giving out these skills, the bots for free, guys, very free. And the premium version, normally I said it's $150, but if you want it, you can get it for as low as $50. What I want you to do is test out the free one I'm giving you. If it's something you'd want, let me know. Like, I don't do videos about this. I am more inclined to boom and crash, synthetic indices rather, your volatility and all that. That's where I am. I don't normally do the traditional forex. Not that I don't do it or I don't know it, I know it, but I don't want to delve into it. I think this field is more profitable to me, that's why I'm into it. But if you like stuff like this, if you want me to branch out to HFX, which is high frequency forex, the traditional forex also, or the bot automated trading, let me know, guys. I'm here to serve you guys. Whatever you want, just let me know. Drop a comment in the comment section below, or chat me up on Telegram or WhatsApp. Just let me know what you want, guys. Whatever it is you want, I'm here to deliver. Like I said, this is free, guys. This support is free. Message me so you can get it today. Start testing it out. If something you like, if something you think is gonna work for you, back test it and start using it, guys. Very easy, very simple, guys. I'm waiting for your messages, okay? Before I forget, if you're new to the channel, please don't forget to subscribe, leave a notification bell turned on, and leave a comment in my comment section telling me you're new. I would like to have you guys. Thank you very much, guys. Hey guys, so in this video I'm going to show you I can make as much as $500 in a week, guys. $500. Look at this trade. Look at all I cut. Look, it's very easy, guys. You can do this. You watch this video to the end. Watch this video to the end. Do not skip any parts. I'm going to tell you about an expert advisor and the trading plan that can make you this much money in a week. As simple. Look, guys, look how much I got within minutes. You can also do this. Be sure to watch the video to the end and subscribe to the channel. Let's go. Hey guys, so here's the video for today. So now this is the expired device I'm telling you about. It's called Sophia 2.0. I don't know if you've seen videos about it. It's by one professional YouTube trader. Now the thing is, I got this robot about $1,000 last year. Yes, last year, and I've been using it for quite a while. Now the thing is, most traders lose money because they are so dependent on this expired advisor, and I don't do that. I have a profitable trading plan I use. That is why I'm most profitable with it. As you can see, the 300 moving average is here. This is my supports and the resistance levels. They're all here, supports and the resistance, and this Denjam moving average and minimax moving average. Now these indicators, they tell you if you're supposed to be selling at the market or you're supposed to be buying. Now let me show you a special thing about this advisor, why I like it. You can see here it has all settings you need for a small account, a big account, or a high account. See what's going to happen. You're going to click auto trading here. I'll give it a minute. Auto trading. Let me see if my algo trading is on. This has to be turned on. Make sure it's turned on. Do you understand? Yes. So like I said, it has smart risker, medium risker, and high risker. Now this smart risker is for accounts $200 and below, medium risker $500 and below, high risker $1,000 and above. That's how it is. Do you understand? Now with this smart risker, you can make it as much as $20 per day. Medium risker, you can make as much as $800 per day, and high risker, the sky's the limit. As beautiful as that. So what's going to happen now is I'm going to click medium risker. Let me tell you how this works. Very simple, guys. So what's going to happen? As simple. Now, okay, let me do that again. You can see these are pending orders, buy stops order. So what's going to happen is, do not mind this stuff. I don't know why it doesn't go out, but what's going to happen is once price reaches this level, it's going to buy. And it's going to buy till it gets to my TP. Very simple. Now, like I said, you have to watch the signal it gives, because this is an expert advisor. It's a robot. Now, people think, or they feel robots should know better than man, but it is your money. It's not the robot's money, so you should know how to use it. Okay, guys. So I got that stuff out of the way. Now you can see this. The price is moving towards this level, and you can see this is a weak resistance level, meaning that's only been tested once, which was this previous spike over here. Now this is a verified resistance level, and it will tell you, as you can see, a retest of one, meaning a spike happened, price went there and it spiked again, price was going back there and it spiked again, telling you that you're having a trade going towards this level. You should close that trade. Now as you can see, the signal came in here. Now the expert advisor gave you the signal because they think it's a profitable entry point, but because of this other indicator, see, this is why you need my own strategy. If you're getting this robot from any other place, You're not going to have all this. So you're not going to have that. So now this is why I need my own strategy and also incorporate my trading plan. Why you're going towards this level? Because you're seeing a verified resistance level. You're not going to enter this trade. You will not enter this trade. And besides, these indicators down here telling you it's the sell market, so there is no way you should enter this trade. The only good thing is it is above the 300 moving average. But if you know my strategy, you know if you're trading towards the 300 moving average, you should also close that trade. It is very much expedient. You follow the strategy to a T. So what's gonna happen, guys? What's gonna happen is I'm gonna take this chart back. But see, this expert advisor does not let you take the chart all the way back. But let me show you something. Okay, so what's gonna happen is I'm gonna turn my data off so I can go back. Yes, I'm gonna turn this off. So this is what I will go back. I'm correct. Yes. So let's say you had a signal here, because to be honest, this indicator, this expert advisor gives good signals. You have a signal here close to a verified, as you can see, a verified support level. Okay, this is untested, but it's a support level all the same. Here is a verified level. Let's say you had a signal here, and normally what if you go to my trading plan, it will tell you wait for 2 or 3 candles before you enter the trade. So you enter that trade, and you can see all the way from here to here, same thing from here to here. It tells you it is a buy signal, and you click, you let the trade run. Once it gets to 20 candles, you're off the market. As simple as this. You can see even from this one we clicked earlier. Let me show you. This one we clicked earlier, from here to this place, you're getting quite the amount of money. And it depends on the option you're using. If you're using a medium risker or high risker or smart risker, so it actually depends on you and your account size. But believe me, watch this video over here. Yes, click this link to watch this video. You can see how I doubled this amount in my account within minutes. Within minutes, guys. Just this indicator, just this expert advisor. Like, this is the bomb, guys. It's quite easy, and it depends on you and how disciplined you can be. Discipline. If you're in a trade, you see it going to the resistance level, end that trade. Look, it might pass that resistance, it might break it. To be honest, it might break this level, but we're not here to gamble with our money. That's the essence of the trading plan. Once you see this trade going towards these levels, possibly you're buying, and you see a trade going this way, end that trade. You're not here to lose money, you're not here to play with your money. End that trade with final entry, as simple as that. And you sell that trade going through this way. So what's going to happen now is I'm going to give you 2 indicators to backtest without this expert advisor. I'm going to give you 2 indicators to back. This is more like a giveaway. So the first 10 persons that click on my Telegram channel and message me, I'm going to give you these 2 indicators. I'm going to give you the support and resistance level indicators and this indicator, this Danjam indicator to backtest. I'm not giving you that expert advisor because I'm going to sell it, guys. I'm going to sell it. So I'm going to give you these 2 indicators to backtest. Use your demo account if you want to backtest for as much as you can and see how it works for free. Or if you want the trading plan and the expert advisors, it's $300. As simple as that, guys. $300, and believe me, with $300 in an expert advisor of $300, you can be making as much as $1,000 a week. Just imagine you tripled your accounts or whatever you use in buying an indicator. Within a week you make $1,000, and it is dependent on your account size. If you have an account of $1,000, then come on, you could be making about $5,000 or $3,000. Let's not exaggerate. Like at most, or at least rather, $3,000 a week. An account of $1,000 within a year, you should be a millionaire if you're diligent and disciplined. Like, that's the thing about forex. Greed. Most people think making money is just you go into the markets, you sit, you click a trade and you make money. It's not as simple as that. You have to be disciplined and be selfless. Do you understand? You have to be selfless. You shouldn't just jump on all trade and thinking you could make money every day. You shouldn't look at the chart all days. Look, if I come to the market, I have a target. If I reach my target of the day, I'm off the market. As simple as that. I'm not here to make to lose money. I'm not here to gamble money with my account. Come on, aren't you tired of losing? So like I said, guys, this indicator works. It works, guys. Just message me on Telegram. Be sure to join my Telegram channel And if you're new to the channel, be sure to leave a comment below, turn your notification button. I post videos about boom and crash every day, of how you can make good money on boom and crash. Look guys, this changed my life. I've been trading for 7 years now. I've been quite profitable, but believe me, I blew accounts. In my first 3 years, I blew accounts. I was taking shortcuts. I won't lie, I was taking shortcuts thinking I could make money without paying to learn it. Believe me, you could see all sorts of materials online. They are free, but they'll never tell you what exactly they're doing to make money. And I learned that the hard way. I thought going to YouTube, going to all the forex guru who give free advices, and I could make such money from there. Look guys, if you want something, if you want to make money, you have to use money to get money. As simple as that. No one will tell you how to get money for free. No one will tell you how to get money for free. They only tell you basics of forex, of how you can make this and make that. No one will tell you how to make money for free. It's as simple as this, guys. Just follow these indicators, follow the strategy as it is, follow my trading plan. If you're buying this, $300, guys, $300 to change your life. Just ask yourself, is it worth it? You've been building an account all this while. Ask yourself, is it worth it? Can you risk $300 to change your life? I promise you, you're gonna get this money. You're gonna make this money. If you follow my trading plan, if you don't make your money, I promise you a refund. A refund is available. If only you follow my trading plan, because you have to give me an investor password. I have to see the trade you're taking to be sure you're following the trading plan. Because if you go contrary to it, then you're on your own. You're going to lose that trade. So guys, one more time, do not forget to subscribe to the channel, turn on your notification bell, and leave a comment below. And also subscribe or join my Telegram channel so you can get notified whenever I post videos. So you can also chat me directly to get these indicators. Okay guys, how you all doing? How are you all doing? I believe you're all making money. Come on traders, I believe you're all making money in the forex market. Look guys, God's eye strategies out here. It's out. Make sure you click this link up here. Click this link up here to get the full settings for the strategy. Message me on Telegram, join my Telegram channel, message me on WhatsApp, Telegram, so you can get this strategy and my trading plan. Look guys, look at this trade, look at this profit, look at this stamp. See, just so you know if it's real, look at the stamp. So you won't say this is a trade I took last year or years before. Look at the this stamp, look at the date when we placed this trade. Look guys, this works. I've been having good news for my subscribers who have been using this. About 3% has bought this strategy right now. Look guys, it works. You can earn passively as much as $1,000 per month. Per month guys, passively as much as $1,000 per month. Now imagine if you're being serious about it. Imagine if you're trading consistently every day. You could make as much as $200 to $300, even $600 per day, guys. Per day. Look, this is proof that this works. This is proof that this works. And in this video, I'm going to tell you about my trading plan, my awesome trading plan that makes everything easy. In this trading plan, this is the cheat code. This is the cheat code to let you know when you should enter a trade and when you should leave a trade. Because if you know when to enter a trade and when to leave a trade, you will never be caught in a spike again. You will never have a drawdown again, guys. That's the cheat code I'm talking about. Because that's basically what traders want. They want to know when they should be in a trade and when they should leave the trade. Because most of the time you can be reckless and be in a trade all day. The market is giving you signs to go out on the trade, but you're being stubborn and you end up losing that money. I'm here to help you guys. Utilize this time. Look guys, utilize this time I have now. Message me, talk about your curiosity, your doubts about the forex market, and I will help you overcome all that. Because look guys, I've been blowing accounts for over 3 years. I've been blowing accounts. But this strategy, this trading plan I've accumulated, I've sat down and drafted over 7 years. It has helped me become a better person, guys. This trading plan is the cheat code all forex trader needs. This trading plan is the cheat code all synthetic indices trader needs, because it tells you when to trade, the market to trade, what you should and should not do, when you should enter a trade and when you should leave a trade, what you should do when you're caught in a spike. Look guys, you all need this. You all need this, okay? Now let's go into the video. If you're new to the channel, please don't forget to subscribe, turn on the notification bell, and leave a comment below telling me I'm new, okay? I want you to leave a comment below right here telling me I'm new. Leave a comment below telling me about your trading plan. Tell me if it's something that's been working for you. Have you ever done the trading plan? Have you drafted the trading plan? If you've not, you're going to be losing. You need a trading plan to get consistent profit in the first market. The problem with most traders is they do not know when to trade, how to get into the market, and how to leave the market. Now you see, if everyone knows how to get into a market and how to exit that market, then you always make good trades. Do you understand this? This is the secret to trading, for you to know your entry point and your exit point. Because if you know when you should get into the market and when you should leave, you will never be caught in a drawdown or a spike. Now, as you all know, I trade predominantly on boom and crash, synthetic indices, sometimes on volatility and step index. So now, in my trading plan is basically the cheat code. Now, if you combine that with the God's eye strategy, just forget it. You're gonna make money, guys. You can earn passively as much as $1,000 per month. That is you earn passively, not even being serious about it. If you want to be serious about the strategy, you can earn as much as $200 per day, guys. $200 per day, I promise you. With this strategy, this expert advisor gives 80% accuracy. If you now combine that with other indicators I'm gonna give you and my trading plan, believe me, you've never seen something like this before. You have never seen something like this before. Look, guys, in my trading plan, I stipulate when you should trade, the amount of stop loss you should use, when to exit the trade. Like if you follow my trading plan, you will never be caught in a spike or in a drawdown. You will never. If you follow it as it is being written to a teeth, you will never be caught in a spike. Because I stipulate guidelines on what you should do and what you should not do, especially on the indicators I'm giving. Do you understand? I'm talking about my trading plan for a very long time. Look, guys, this is the cheat code. God's eye strategy and this trading plan is the cheat code to earn passively, to earn good money in this boom and crash market. Look, people are making money every day. People are making good money every day. You need to get this right now. You need to get this right now. Join my Telegram channel, message me on WhatsApp, message me on Telegram. You need this right now. Come on, guys, you need this right now. Because if you have this, you would know that you're not supposed to take trades that are moving close to the 300 moving average. This is one guide in my trading plan. The 300 simple moving average, if you see your candles moving there, believe me, it's going to spike. If you're in a boom and crash market, it is 80% accurate to spike. Even if it crosses about 3 candles extra, get off that market, it's going to spike. Like this 300 moving average is very important in the market. It tells you the trend of the market. So whenever price goes to that place, it will react. It is a sure sign that it will react. Do you understand? It will react. And in my trading plan, I stipulate how much you can make a day and the reason why you should never leave your money in your MT5 account. Whenever you make profit for a day, remove that money and keep it in your derived wallet or withdraw it if possible. Because if you do not do that, you'll be tempted to go back and trade. Like this trading plan is awesome. Believe me, it has 10 guidelines. You need this to be a successful trader. It is a cheat code, guys. You will never see this anywhere. You will never see this anywhere. Believe me, I've generated this over years of trading and it's been working for me in all my strategies. This trading plan is accurate. You need this to be able to trade consistently and make consistent profit daily in the boom and crash market, guys. Message me on Telegram, join my Telegram channel, message me on WhatsApp if you want. You need this strategy, God's eye strategy, guys. You can make passively as much as $1,000 per month. Come on, guys, per month. How much have you been getting your 9-to-5 job? How much are you getting there? Look, guys, I told you days ago I was making the test with one of my subscribers. We just made a test. I was explaining to him how this strategy works and $10 just came in. That's not me. That's me not being serious. Imagine if I was being serious for a day. You could make consistently as much as $1,000 per day. Look, guys, you are seeing my videos, you're seeing my profits. This cannot even be demo. This is obvious. It cannot even be demo. If you're thinking it's a demo account, this is a real account, guys. It's really an account. I have no reason to lie to you. I'm not forcing you to get the strategy either, but believe me, if you want to make money, I would advise you,
get this strategy and change your life, guys. Just change your life. I'm talking much about this strategy because it's been helping me. Look, others are getting this. If you're still staying there, then I feel bad for you. Just message me on Telegram or WhatsApp to get to me straight ahead. You need this strategy, guys, to change your life, and this trading plan will make things easier, to make trading easy for you. It's to make trading a whole lot easy for you. Believe me, I've used this for years and it's been working for all my strategy, catching spike or trading the trend markets, guys. It works, believe me, it works. Just make sure you message me and subscribe to the channel if you're new to the channel. Subscribe, leave a notification bell turned on, and leave a comment in the comment section and tell me you're a new subscriber. I would like to message you, I would like to help you. Come on, guys, use me while you can now. Utilize this time I have. Whatever questions you have, whatever doubts and curiosity you have, message me and I'll clear them for you. So guys, this is a little snippet for my strategy, for my trading plan. This explains what happens if you're in a trade, what happens if you're being caught in a spike, and what happens if you're being caught in a second spike. So I'm going to explain something here, okay? Let's read it. I think this is the first one. It says if you're in a trade and you are caught in a spike, which is the first spike, which is this spike over here. So if you're caught in a spike, it is advisable to stay on that trade only if the spike is not as long as the previous spike, and this, guys, is the previous spike. You get? So as you can see, the length of this spike is not as long as the length of this one. Like, it's not up to the what's it called, previous lower low. That's what I mean. And this really depends on the account size. This would work mainly if you're on a $200 account or a $100 account, but at least a $200 account, so you can hold this drawdown. And just so you know, use proper risk management. Do not risk more than you're willing to. Okay, like I said, if you're on a trade like this, and you're being caught in a spike, let's say this is your entry point, you're being caught in a spike, stay on that trade. This is because boom and crash markets are unidirectional, meaning they always go back to entry point. And you can see here, they always go back to the entry point. Now let's say peradventure your trade was bigger than the spike, something like this. This first spike was bigger than the previous lower low. It is advisable to quit the trade once it gets close to your entry point. Do you understand? Once it gets close to your entry point, it is advisable to quit the trade. But like I said, guys, this is a snippet about the trading plan. In the full plan, I explain in details, guys, what you should do. This is just a little snippet about it. Within the week, I'll post a long video about the Ghost Eye strategy, the installation guide, how to link your derived account, how to backtest it on a demo account. Because like I said earlier, Ghost Eye strategy does not work on a demo account, but I'm going to show you how you can backtest it, how to place pending orders. So be sure to leave a notification bell turned on so you'll be notified when I upload that videos. Look guys, I post powerful strategies every day. I post powerful videos that could help you make money, like will help you change your life, guys. Look, it's been working for me. I've been trading for about 7 years and it's been working for me. I'd advise you, think about it. Think about where you want to be in 5 days now. Would you still want to work your 9 to 5 jobs? Aren't you tired of that? This can help you become rich. Like, it can help you earn money passively as much as $1,000, guys.
Hello everyone, how you all doing? This is Cleanz FX here. So now in this video, I'm going to show you how you can log in or the installation process for the Ghost Eye strategy. Now, if you've gotten the indicators I sent, if you bought the indicators, you'll have all these files here. Now, just so you know, this strategy works predominantly on MT5, although you guys it on MT4, but I've backtested it on MT5 and it has a 90% win rate. So I'd advise you, please test it on MT5. I'll also bring out a video. I'll upload the video of how you can backtest with your demo accounts, because you should know that this strategy, this indicator, this expert advisor does not work on a demo account. Understand me? It does not work on a demo account. You mustn't fund a real account. You can open a real account, zero balance, $0. It will work. But in my upcoming video, I can tell you how you can backtest with the demo account. So if you've gotten this file, what you're going to do is open your MT5. As you can see, I already have it. Installed there. What's going to happen is open your MT5. So now, since you're in MT5, what you do now is click on File, open your data folder. Okay, now pop-up is going to come up. This folder is going to come up. What you do is click on MQL5. Can you see this? MQL5. Click on it. Now, if it was MT4, you see MQL4, but since we're on MT5, you click on MQL5. Then click on SPAT. So what you copy is, so from the gold eye strategy, what you copy is, you click on indicators. Now, give me my system having issues. Yes, you click on robots, MCL5 robots. You get copy these two indicators. This is the expert advisor, the robot itself. Copy it. You're going to Ctrl-C to copy. Then you open the file. Then you paste. As you can see, I already have it here, but I'll not paste it. So what you do is copy it there and you paste here. The next thing you're going to do is click on this again. Click on libraries. Okay, libraries. You click here, this folder here. Copy this and you paste here. Okay, simple as that. Now the last thing you're going to do is the indicators itself. You click on indicators. You click all these three, 1, 2, 3. You copy it. You come here, MKL5 again. Inside indicators, then you paste it. Once you've pasted that, copy this 4 again. 1, 2, 3, 4. Copy it and paste inside it because they are quite expedient for the strategy to work. Then last one you do is click on templates. Copy this and then you paste it in the templates folder, profiles folder rather. Paste this here. So you can see, very easy guys. Now if you've done all this correctly, the next thing you should do is you see it right there. You see it right here. So what you should do is drag it and drop. Drag and drop like this. It depends on your screen, big screen or small screen, whatever it is, drag and drop. Then this will come up, press yes. So what will happen is go to input, put in this code 1, 2, 3, 4. Okay, and that's it. This guide will come up. Please make sure to read through the guide so you don't have any issues with the expert advisor. Read through the guide, please. Press close. And just so you know, your chart has to be on the 1 minute chart. So before you do all this, or maybe after you've done all this, put it on the 1 minute chart. You can see time frame 1 minute, and that's it. So just so you know, if you want to get this started, I normally use auto trading, medium risk or high risk. So all you do is click on this. You have to double click it, by the way. As you can see, the signals are given. So what happens is you would work through the trading plan to know if this signal is quite accurate or not. You're not just going to jump on the signal because it gives you a signal. Make sure your algo trading is turned on. Make sure you turn on algo trading. Okay. So that's it for this video. In the next video, I'll tell you how you can backtest with the demo account. So like I said, you mustn't fund your real account to make it work. As you can see, I have an account of -$5, and it's working. But if it's a demo account, it won't work, guys. It will not work. So that's it for this video. I'll catch you up on the next video.
Hey there, I bet you're tired of trading. I bet you're tired of losing your money whenever I trade. Well, I have a quick solution for you. Watch this video to the end and you know how I moved $8 to $1,000. I bet you're wondering how I did that. Yes, I did it. I moved $8 to $1,000 within 24 hours. And if you watch the video to the end, I bet you can do the same thing. Just follow the steps detailed in this video and you do the same thing. Now, this is my history of what I did. Now, disclaimer: you cannot fund a derived account with $1. What I did, I funded with $10, then I had a loss, not a loss, a swap of -9, and I made it $1, and that's what I did. Now, as you can see here, this all happened within a day, on the 10th of July to the 11th of July. Now, this stuff is something you have to be disciplined about, and all I did was to catch spike through this strategy I'm giving in this video. Just spike, no trend. I bought boom and I sold crash. That's it. Now let's get into the video, and please don't forget to subscribe to the channel, turn on your notifications, and be reminded this week I'll be posting explainer videos about price actions. You need these price actions. If this is the first time watching my video, I want you to drop a comment in the comment section. Just say hi or whatever. I'd like to have you. Thanks. Now let's get into the video. How are you all doing? I want to believe you're having a beautiful day. I want to believe you're all making money out there. It is important to make money. So straight away, I'll take you guys to the settings of this indicator. This is the spike killer indicator, the one I've been teasing about in all my shorts. It's very wonderful, guys. Look, with this indicator, you can use as an account as low as $20 and go it to $100 in within a day. Now this strategies for people who want to fund much in their account, who would want to how do I explain this, spend too much, because let's say they're just starting. So this is for a small account, and I'll show you a video of how I also did it. I had about $18 in my account, and boom, it's went to about $100. It's very easy if you follow the steps. It's very easy. Please follow the steps. And if you're new to the channel, please be sure to subscribe and hit the notification button so you can be notified whenever I post again. I post every day, guys. I post strategies every day and every week, so you're gonna get tons of values from this channel. And also starting from today or tomorrow, I'll be posting videos about price actions, because I understand most traders, they just look for this holy grail strategy and indicators thinking it's gonna give them this quick money. But if you've been watching my videos and looking through my description, I always say price action is key to all trading. You need to know about price action, double bottom, double top, trend line, the curve, the reversal. You have to know all this, because like it or not, even in synthetic indices, you need price action. So from this week, I'll be posting about price action basics. Just make sure to subscribe to watch these videos. If you have that knowledge covered my indicators and my strategies, I bet you'll be making good money. So let's get started. So right off the bat, I'll go to the indicator, and the first one we'll choose is going to be our moving average. If you've seen my videos, you know I always use this moving average. I don't joke with it. It is one of the most important indicators in all my strategies. It's very much important. Look, so period 300, shift 0. The method is going to be simple. Apply to close. Your style is 4 pixels. Choose a color of your choice, but always leave it at red, so you know it's danger, so you know it's very much important. So that's what you do. You click done. The next indicator, still on your main chart, it's going to be a moving average 20, period of 20, shift 0, exponential. Your method is going to be exponential. Apply to close. The style is going to be 3 pixels. Then the color, I use gold. Now this indicator is just to tell you the trend of the market at a particular time. You can go to the 15 minutes. So here you will say, you know it's a downtrend with this indicator, this moving average, this gold moving average. You know it's going down. Let's see, as you can see here, because the candles are below the moving average. If it was above, then you know it's going up. See, it's below the moving average, so you can see it's a downtrend. here is an option because the candles are above the moving average. This is one of the videos I'm talking about, trading with the trend lines. This is also price action, so that's why we're using that this indicator. So now I'll go back to 1 minute. Now the next indicator we're going to use is the Ichimoku. I'm not going to pronounce all those words there. No, I'll not even dare it. But let's see. The Tenkan-san is 9, Kujin-sen 26, and the third one there, which is 52. Now down there you have the first color is going to be blue, 4 pixel. The rest is going to be the color of your chart. If your chart is a white chart, leave it white. If it's black, leave it black as I left mine. Then the levels, nothing there, just as it is. Once you're done, click done. Now the next thing we're going to add, the next indicator we're going to add is called the accelerator oscillator. That's what you're going to add, accelerator oscillator. Add this, value up is green, value down is red, line width is 2 pixel, your levels is just going to be 1, which is level 0, just leave that 0. Then if style 4 pixel, color blue, just like that. You click done. The next indicator you're gonna add is the accumulation distribution. So the volumes is gonna be thick, style 4 pixel red, the levels 0 as it is default. Click done. Then the last one we're gonna add is the Ichimoku again, just the same settings with the previous one. 9, 26, 52. This color is gonna be blue, 1 pixel all the way down. The same thing, if your chart is black, leave it as black. If your chart is white, leave it as white. So let's go into the indicator and see how we can use this indicator. So you zoom in, 1, 2, let's go back again, zoom out completely, zoom in, 1, 2, 3, 4. That's the 4th zoom level, that's the last of it. So now how are we going to use this? So see how it works. Whenever you see these lines, whenever they meet below this level, just hit for a buy. This is boom 500, hit for a buy, just hit for a buy, and before 3 to 4 candles it's gonna spike, and that's what happened here. Now let me tell you something else. Now let's say you miss this first spike, maybe you were doubting it. As long as this stuff is still under this level, it's gonna spike again, trust me. As long as the red and blue line is still under this level 0, it's gonna spike again. And let's see if it did. And you see, so now you can see one of them has come out, which is this one. So you can just leave it and wait for another entry, but it's still gonna spike again. So that's, I'm gonna go back again. Look, whenever these two lines meet, just here under this one, no spike is gonna come out. And I said if you want to be too careful, you can wait, let it spike once. Now if it spike once and it's still under this 0 level, enter again, it's gonna spike. As simple as that. Just the process. If it spike once and it's still under there, enter again, it's gonna spike. But for me, once it just crosses, I'm entering the trade with about 0.20 lot size. If I want, I can make it 0.20 times 3. Yes, 0.20 times 3, that's 0.60. Now if I waited for 4 candles, it has spiked again, I want enter again. As simple as that. Let's find another confirmation of when it happened, so you guys can see. Just so you know, you should be doing this on a downtrend when the trade is going down, meaning it's going to spike. Don't know if you understand me. Like you can see, the candles are below this this gold moving average. Then use a downtrend. Do you understand? So you should be expecting a reversal or a spike. So see what happened here again. The two lines met below this level. Let's see if it spiked. See, this spike. See the little spike. It's still under the what's it called? the zero level, I would enter again, and you see, wow. Now can you see how easy this is, guys? The thing is, sometimes most of you start tweaking the strategy and it makes it seem like it's not working. It makes it seem like I'm not teaching well, because when instructions are being given out, follow these instructions to a T and you'll not make losses. You can grow a small account of $20 to $1,000 within a week. As easy as that. As easy as that. Look, it's not that hard. It's very simple. It's not that hard. And now let me ask, in case you're asking, when can you get off a trade? When can you get off a trade? The simplest way is this: once this blue line or the red line exceeds this zero level, close the trade. Do not hold it thinking you're waiting for another spike. Do not hold it. Just once it crosses, just end the trade. Do you understand? So let's find another confirmation. They'll move to crash and see if it works there. But believe me, it does work. The same thing here. You can see when they touched, then a spike happened. Now it's still under the zero line. Let's see if another spike happened, and voila, it's gonna happen. And now once the second spike happened, this blue line is gonna go above the zero level. Then you end the trade. Let's go again. We can see series of spike here. This first one happened, it's still under the zero level. Another one happened, still under the zero level. Now normally you would want to stay in this trade, but I would advise you to just let it go. Do you know why? Because now these lines have parted. Because they have parted, you shouldn't stay in such a trade. Because you have parted, you shouldn't stay in such a trade. So let's go again. Now let's use crash and see what happens. Crash 500. So now when this is gonna happen when the two lines meet above the zero level. Let's find a good confirmation for that. Please do not be greedy, do not be selfish. Wait for your confirmations to click before you trade. Well, okay, now see what happened there. Exactly above the zero level. Can you see this? Exactly above the zero level. Now one spike happened. Now it's still above the zero level. Let's see if another spike will happen. And spike happened. You can see a spike happened. Another one happened. Look, spikes happen every day. Like, if you ask me, it's easy to catch spikes than trading the normal trend. If you ask me, in a way, although I tend to trade just trend, but most times if I want to be risky, if I want to make quick money, I'll catch spikes. Predominantly on the boom 500 and crash 500. This market spike quite a lot. It's quite volatile, so you can get good money from this market. Do you understand? Another level. Let's see another situation. Let's find another good situation where they meet, rather, not cross, where they meet. So you should be careful. Let's find something. This was almost good, but nah, this was late. That's why I say do not rush it. It's gonna come. Do not rush it, please. It's gonna come. Wait for the lines to meet. Wait for the lines to meet, not when they cross. Once they meet, yes. See a good example. See here, the lines met above the zero level, and what happened? A spike happened. Now this is a small spike, but it's still above that zero level, meaning another spike is gonna happen. And can you see how huge this is? This is equivalent to about 10 candles. Now with a one lot size, in a trade you can be having about $5 to $10 just in one spike. Do you understand that? Like, this video you're seeing here, just one trade. I saw it and I quickly entered it. Entered about 4. Now I had about $18. This thing went to minus $14 till minus $10. No, minus $14, not $10, minus $14. I was about closing it by, like, the confirmation was just too good to close it, and I left it and I came back, and you can see above $90 profit. This stuff works, guys. Just be patient with it. It works. Let's go to crash 500, sorry, crash 1000, and see the 1000 PS how much it works there. Okay, this is another trade. I think it's gonna spike. So what's gonna happen? This is gonna spike. So I'm gonna enter this trade now. I'm going to enter with about 50. So this is, I'm gonna sell. I'm gonna sell here. This is equivalent to 2 lot size. You know I'm doing this, right? You saw what happened there. They met above this level, and it's a good indicator for a spike to happen. You can see they're meeting. Let me enter again. This is gonna be a sell. I know this is gonna work out, guys. Look, it's gonna work out. Please, like I said earlier in the video, during this week I'll be posting about price actions, because you need to know this stuff. Price action, it's gonna help you in your trading very much. It's gonna help you very much, so you need to know about it. Please do not forget to subscribe to the channel, turn on your notifications so you can get notified whenever I post. I post new videos every day, new strategies every week. At least learn one of them and master it. Backtest on the demo account, and you're gonna be unbeatable. Do not just go about learning all strategies. They're not gonna work out for you. Seriously, it's not gonna work out for you. Find one strategy you're good with, that you think is convenient for you. If it's trend trading, go with it. If it's catching spikes, fine, go with it. But find something you know you can do well, then backtest it and be a master at it. As simple as that. So that's all for today, and let's see if I'm gonna catch this spike. If I do, you're gonna see that at the end of this video. If I don't, well then, it's a trade for another day. Thank you, guys, and again, do not forget to subscribe to the channel, like and turn on your notifications. Share these videos, please guys, share this video so anyone you know who is interested in forex. This way, this kind of content is going to reach more people, and those who are actually needing this value will get educated and make money. The essence of this video is to help people make money in this difficult time. So you don't know who you can be helping by sharing this video and liking it. Please, thank you very much. So guys, I hopped into this other trade on my other account because I had a loss of about $10 into that trade, because I used a minimal risk management. So what I did, I got into here and I doubled my lot size. As you can see, it's a beautiful profit. Like I said, it works very much, guys. Just stick to the plan and steps as it's been detailed in the video. Thank you.
Hello traders out there, how are you all doing? I believe you're all having a beautiful day. I believe you're making money with the God's eye strategy. I believe you're all making money, because I am. I don't know about you, I am making money with this strategy. Look guys, I want to explain some things about this strategy, okay? And I just understood that some persons really don't understand the strategy and how it works. So I want to clear out something. This strategy is fully automated. Do you understand? This is a bot, meaning you can passively make as much as $1,000 a month. That's you being humble, as much as $1,000 a month, guys. Look, if you want to be let's be realistic, you want to follow your trading plan and risk management, you could make with your $1,000 account, you could make as much as $100 to $200 a day. Do you understand? Now you want to be more minimal, riskless, you could make as much as $50 a day. Like, it is very accurate in the sense that if you follow my trading plan to the teeth as I stipulated in the trading plan, you will never catch a loss. Do you understand? You will never be in a loss. Now let me explain some things about the strategy, about the EA. Okay, like I said, it's fully automated, and let me tell you what happens once you click auto trading. Okay, it gives you three options, like you can see here. You see smart risker, medium risker, and high risker. Now this is dependent on how much you have in your account. Smart risker, let's say you have $100 and below. Medium risker, you have $100 to let's say $500, and high risker $1,000 and above. That's how it works. So it depends on your account size. Do what fits your account size. So what's gonna happen here is I'm gonna click medium risker now. So it's gonna happen. Just watch. Okay, as you can see, as simple as that. Look at it's automated. It is very much automated in the sense that you can just be at your leisure, be at work and make money. You can make money while sleeping. That's how good this strategy is. And now I gave you the other indicators that I stipulated in the trading plan. This supports and resistance and support level. Can you see what happened here? See what happened here? Price was going to this point and spiked. It was coming again and spiked. Now if you have my trading plan, you see I stipulated all this down. Whenever you're trading as price or the candles are going towards a support level, be it weak or untested or untested, please exceed that trade. It is stipulated in my trading plan. Same thing for the trended moving average. Whenever price is going towards there, exceed the trade because it's going to spike. As you can see, the price has opened a resistance level, a verified resistance level, meaning it's been tested before and now the price is going back there, meaning you can hop on this trade and hold at least 5 to 10 candles. 5 to 10 candles, guys. But there is a but. If you see these indicators down here, you can see they're all telling you it's an uptrend and we are on boom 500. So we are not going to enter this trade because it's an uptrend. You see it's showing green there, showing green, meaning you should not enter this trade. Do you understand how it works? So basically the EA opens signals for you, accurate signals, about 85% accuracy. Then what you do is follow my trading plan and what I stipulated in the trading plan. It tells you when to enter a trade and when to exit the trade. Do you understand? It tells you what you should do whenever price is going towards a certain level. It tells you what you should do whenever price is going towards the support level or the resistance level or even a 300 moving average. It tells you about risk management and your lot sizes. Follow this trading plan. This is the optimal way of making money, of getting back this money using buying this strategy. Like I said in my description, the strategy itself is $300, guys, but the EA is $150. Then the indicator on the trading plan is $150. So you decide what you want to have, what do you want to get. I would advise you go for the full package, but whichever you want to go for, just message me on Telegram, guys. Join my Telegram channel, message me on WhatsApp. And if you're new to the channel, please do not forget to subscribe and leave a notification bell turned on. Leave a comment below telling me you're new. I post powerful strategies every day, guys. Like powerful strategies that could change your life. Like since I started using this strategy, believe me, it's been awesome, guys. It's been awesome. I could make as much as $1,000 a month, guys. A month. If I'm not being serious, a month. Then imagine if I'm on the PC, let's say every day, I could make as much as $2,000 to $5,000, guys. And the good thing about this is you could make money passively, like doing nothing. You could be on your full-time job and you're still making money. Look, guys, look at the profit I'm having. Look at this profit I'm having. It's amazing. Now also I'm going to show you I can backtest this on the demo account because it doesn't work. This EA doesn't work on the demo account. But what's going to happen is I'm going to show you how you can backtest this on a demo account. So before you run the strategy or use it on your real account, you're going to backtest it. Do you understand? Now what's going to happen is I'm going to jump onto my phone, onto boom 500. Okay, give me a minute there. Okay. So now I'm on boom 500. Okay, so what's gonna happen is look at the price. Look at the signal it gave. It's a sell stop signal. Do you understand? Meaning it's not a market execution order, meaning you're not entering the market immediately. It's a sell stop signal. Guys, look over here. It's showing red, meaning it's gonna sell. The trend has changed, meaning the bearish in the market, the bearish market is pulling weight. It's pulling weight, guys. This market is gonna go bearish. It's been bullish all this while, or you can see all this green here. But this indicator tells you that the market has changed the trend. Guys, you need this strategy. You need this strategy. It tells you everything. It makes trading easy for you. So what's going to happen is you're going to double click this signal line here. That's going to give you all you need. All you need. So price is about 3986. That's what I'm going to impute. So you're going to click here, this place on your mobile, plus then you click market execution and click sell stop. Now this is because we are on a boom market, so it's a sell stop order. Do you understand? So you're going to click price, the price, this price here. Let me take this over here. You're going to click this price, which is 3986412. Okay, 3986412. Now the TP and stop loss. This is stop loss 4016. Excuse me, 4016, and this is 412. Then the TP is 3976412, guys. 412. Then here you can choose your lot size. I'm gonna use a lot size of about 2. Okay, let's say 2.5. Then I'm gonna place the trade. Okay, so this is how you place on the demo account. Although this is a real account, I'm trying to grow this account. It's $2. I'm trying to grow it to about $100 with this strategy. Let's see if it works. If it works, guys, then you know that you can scalp as, look, with this strategy you can scalp 3 to 5 counts a day, guys. 3 to 5 counts a day. It is that accurate. And you can also work passively, like I said, as much as $1,000 a month, as much as $300 a day. It depends on how much you want to stay on the chart, guys. So this is the trade. This is where it's gonna come in. It's gonna execute the market here and gonna take profits here. Then this is about let's say $10. Yeah, $10 profits. So guys, that's it, guys. So I want to be back testing this strategy on what's it called, on currency pairs, but I understand most of you traders don't know much about price action and candlestick patterns, and really it's gonna help you a lot. So what's gonna happen after this video, I'm gonna upload an ultimate guide about candlestick patterns. Please, guys, watch that video to the end, guys. Watch that video to the end. Whatever I need to know about candlestick pattern is in that video. Like nothing is left out. No stone unturned. Watch that video to the end, guys. It's really gonna help you guys. Like, it's gonna help you guys. It's a candlestick pattern. It tells about price action. Whatever you want to know about candlestick, doji, Morningstar, all that, it's all stipulated there. I all stated it there. So make sure you subscribe if you're new to the channel, turn on your notification bell, and leave a comment below telling me you're new. Okay, guys, I'll see you guys in the next video, and that's out.
Long as I get paid, doing a show. I've been on the road, I don't care where I go, as long as I get paid.
Hey guys, welcome back to another episode. Candlestick patterns are one of the most important factors when it comes to trading successfully, yet you'd be surprised that the majority of traders use candlestick patterns incorrectly. In this video, we're going to show you everything you need to know about trading candlestick patterns from beginning to end. Now, there is a massive, highly detailed candlestick patterns trading guide that works in combination with this video and is required to fully grasp these advanced concepts. We'll discuss how you can get this later in the video. So, in order for us to keep producing these videos for free, we need your support by hitting the like button, subscribing, and turning on the notifications bell. Now, here's exactly what we will be covering in this video. So, let's get right into it. We're going to first do a quick recap of the candlestick basics to get all the new people here on the same page. First, how to read candlesticks. You have your green candles, which are bullish. You have your red candles, which are bearish. This here is the candle body. These here are the candle wicks. For green candles, the opening price is at the bottom here, and the closing price is at the top here. For red candles, the opening price is at the top here, and the closing price is at the bottom here. The wick ends at the top represent the highest price point. The wick ends at the bottom represent the lowest price point. So, why are candlesticks important to understand? The candlestick pattern that forms acts as a leading indicator that tells you exactly what is occurring in terms of the buying and selling within the market at that particular moment in time, which then helps give you a directional bias to trade in. So next, how do we use candlestick patterns? Many traders will take trade entries solely based on what candlestick pattern forms on its own, which results in low quality trades. What we like to do is combine candlestick patterns with key levels and areas of confluence to increase the quality of the trade. And the higher the trade quality, the higher the percentage chance of success. So now, let's dive into the exact candlestick patterns we use. Now, there are a multitude of candlestick patterns that traders use, but these are the ones we find the most effective and that occur the most often. Let's start with the first, which is the long wick candle. This is any candle where the wick is sticking out in the same direction as the moving trend. Now, there are two variations of the long wick candle that make it of higher quality. First, the smaller the body of the candle, the better the candle. And second, the longer the wick, the better the candle, also known as a very long wick candle. So let's now show how this is used in combination with key levels. Starting in an uptrend, first, price came up, hit and reversed, giving you your key level of resistance. As price came back up, you had a perfect long wick candle form right at the key level of resistance, which presented a trade opportunity short. So what is the price action psychology behind this pattern? Buyers tried to push price higher, but they failed to close it out with momentum during that initial push, causing the wick to stick out. If they closed with momentum, then the candle should have looked like this, which is a momentum candle. The long wick candle forms through a combination of buyers taking profit at the key level, as well as sellers stepping in and opening new short positions at the level. This double action of buyers closing long positions and sellers opening short positions causes price to stall and react to the key level within that particular moment in time. Now, going in the opposite direction. Price came down, hit and reversed, giving you a key level of support. As price came back down, you had a perfect long wick candle form right at the key level of support, which presented a trade opportunity long. So what is the price action psychology behind this? Sellers tried to push price lower, but they failed to close it out with momentum during that initial push, causing the wick to stick out. The long wick candle forms through a combination of sellers taking profit at the key level, as well as buyers stepping in and opening new long positions at the level. So next, multiple long wick candles. So exactly like the name of it states, this is where you have multiple long wick candles clustered together. Now on the charts. Starting in an uptrend, price came up, hit and reversed, giving you a key level of resistance. As price came back up, you had multiple long wick candles form at the key level, which presented a trade opportunity short. So what is the price action psychology behind this pattern? This shows that buyers tried over and over again to breach the resistance level, 4 attempts in total to break through, but failing, showing that sellers held the level strong and that the level is valid this time around. Now, going in the opposite direction. Price came down, hit and reversed, giving you a key level of support. As price came back down, you had multiple long wick candles form at the key level, 3 in total, which presented a trade opportunity long. So what is the price action psychology behind this pattern? This shows that sellers tried over and over again to breach the support level, 3 attempts in total to break through, but failing, showing that buyers held the level strong and that the level is valid this time around. So next, the inverted long wick candle. The inverted long wick candle is a lot like the traditional long wick candle, except the wick sticks out in the opposite direction of the moving trend direction. Now, on the charts. Starting in an uptrend. First, price came up, hit and reversed, giving you a key level of resistance. As price came back up, you had the inverted long wick candle form right at the key level of resistance, which presented a trade opportunity short. So what is the price action psychology behind this pattern? Once price got to the level, you had strong selling presence that entered the market immediately within that particular moment in time, causing the wick to stick out below and against the moving uptrend, and validates that the level is in play and respected this time around. Now, going in the opposite direction. In a downtrend, price came down, hit and reversed, giving you a key level of support. As price came back down, you had the inverted long wick candle form right at the key level of support, which presented a trade opportunity long. So what is the price action psychology behind this? Once price got to the level, you had strong buying presence that immediately entered the market within that particular moment in time, causing the wick to stick out above and against the moving downtrend. So next, the inside bar candle. This is where the high and the low of the candle are contained within the high and the low of the previous candle. Now on the charts. Starting with an uptrend. First, price came up, hit and reversed, giving you a key level of resistance. As price came back up, you had the inside bar pattern form right at the key level of resistance, which presented a trade opportunity short. So what is the price action psychology behind this pattern? Price failed to make a higher high candle, which shows a loss of momentum from the buyers in the market and is an early signal of buyers no longer being in complete control of the moving trend direction. Now, going in the opposite direction. Price came down, hit and reversed, giving you a key level of support. As price came back down, you had the inside bar form right at the key level of support, which presented a trade opportunity long. So what's the price action psychology behind this? Price failed to make a lower low candle, which shows a loss of momentum from the sellers in the market and is an early signal of the sellers no longer being in complete control of the moving trend direction. Now, before we continue, we have a very important question we need you to answer. Do you prefer videos with a white background, like the one we are using in this video, or would you prefer a black background, like the ones we use in all our past videos? Comment below right now and tell us which background color you prefer. Also, if you're enjoying this video, please hit the like button, subscribe, and turn on the notifications bell so that you know exactly when we release new content. The last thing, make sure you go follow our Instagram account @WiseTrade to stay notified about a lot of big projects we have on the way. So next, consecutive shrinking candles. This is where you have consecutive candles that shrink in size. Notice how every candle gets smaller and smaller. Now on the charts. Starting with an uptrend, price came up, hit, and reversed, giving you a key level of resistance. As price was approaching the key level, notice how the candles get smaller and smaller in size. Now this pattern works best when it also forms a reversal candlestick pattern once price reaches the level, such as a long wick candle like this. This isn't required, but when you have this combination, it will increase the quality of the setup. So what is the price action psychology behind this pattern? It shows a loss of momentum from the buyers in the market because the distance traveled per candle is shorter and shorter and is an early signal of the buyers losing control and momentum of the upwards trend direction. Now going in the opposite direction. Price came down, hit, and reversed, giving you a key level of support. As price starts approaching the key level, notice how the candles get smaller and smaller in size, which presents a trade opportunity long. Again, notice how the shrinking candles finish with multiple long wick candles, which increases the quality of the trade setup. So what is the price action psychology behind this? It shows a loss of momentum from the sellers in the market because the distance traveled per candle is shorter and shorter and is an early signal of the sellers losing control and momentum of the downwards market direction. So next, consecutive candles increasing in size. This is where you have consecutive candles that get larger and larger in size. Now on the charts, starting in an uptrend, you first need to identify a short trade setup at resistance. Now, some traders will take a short trade right after the long wick candle forms here, which is fine. But a more secure entry is to wait for this candle pattern to form where the candles get larger and larger. Then you would take a continuation trade short. So what is the price action psychology behind this pattern? The pattern confirms that heavy selling presence has actually entered the market after the trade setup, because it shows a gain of bearish momentum from the sellers as the distance traveled per candle increases, meaning you can use the pattern as a trend change confirmation. Now going in the opposite direction, you first need to identify a long trade setup at support. Now, right after the long opportunity setup occurs is when you would look for this pattern to form, where the candles increase in size one after the other. So what is the price action psychology behind this? The patterns confirm that heavy buying presence has actually entered the market after the trade setup because it shows a gain of bullish momentum from the buyers as the distance traveled per candle increases. So next, the candle color change. This is where you have consecutive candles all of one color before an opposing color finally presents itself. Now on the charts, starting with an uptrend. First, price came up, hit, and reversed, giving you a key level of resistance. As price starts approaching the key level, notice how you have all green candles before a red candle finally appears. Now, this pattern works best when it also forms a reversal candlestick pattern once it reaches the level. This isn't required, but when you have this combination, it will increase the quality of the setup. So, what is the price action psychology behind this pattern? The consecutive green candles shows a continuation of buying presence before a red candle appears, which then shows a loss of momentum from the buyers as price failed to close the candle with a higher candle close. Now, going in the opposite direction. Price came down, hit, and reversed, giving you a key level of support. As price starts approaching the key level, notice how you have all red candles before a green candle finally appears. So what is the price action psychology behind this? The consecutive red candles shows a continuation of selling presence before a green candle appears, which shows a loss of momentum from the sellers as price failed to close the candle with a lower candle close. So next, the momentum candle. This is where the candle body size is much larger than the previous candle, which represents a heavy gain of momentum. Now, on the charts. So starting with an uptrend, you first need to identify a short trade setup at resistance. Now, some traders will take a trade short right away after the inverted long wick candle forms here, which is fine. But a more secure entry is to wait and see if you get a momentum candle to form like this after the trade setup. Then you would take a continuation trade short. So what is the price action psychology behind this pattern? The momentum candle confirms that a lot of sellers actually stepped into the market at the level, creating the heavy bearish momentum and thus causing the massive momentum candle to form. Now, in the opposite direction. You first need to identify a long trade setup at support, such as this one right here through the long wick candle. Now, right after the long trade setup occurs is when you would look for this momentum candle to form. So what is the price action psychology behind this? The momentum candle confirms that a lot of buyers actually stepped into the market at the level, creating heavy bullish momentum and thus causing the massive momentum candle to form. Now, as a reminder, don't forget that there is a massive, highly detailed candlestick patterns trading guide that works in combination with this video and is required to fully grasp these advanced concepts. So now that we've covered the candlestick patterns we look for, let's get into how to actually use these patterns through a variation of entry methods. So, a question we often get asked is, how do you trade with candlesticks in bullish, bearish, and in sideways markets? We always read the comments to decide the next videos we plan on making. So right now, go to the comments below and tell us exactly what topics you want us to cover next. So here's the core formula of the strategy. And here are the variations of the strategy we'll be going through. Now, for this section, we are only using one time frame to keep it simple. So, starting with the first, which is a trend trade in an uptrend. Here is the anatomy of the trade setup. So, let's show this right on the charts. You have your clear moving uptrend through the higher highs and higher lows. So you want to trade with the moving uptrend. This here was your area of confluence and where the trade opportunity presented itself because of the following factors. Key support level, the moving average that crossed right at the same area, and the 61.8% fib level. Now, as price came back down, you were looking for any of the candles we covered to form at the area of confluence to show a reaction to the level. In this case here, the candles you had that formed is multiple long wick candles and an inverted long wick candle. Again, it could have been any of these candle patterns that formed, as it would work the same. Now, a reaction does not equal an automatic trade long, as price can stall at the area of confluence and still break right through. Because even though your big picture trend is an uptrend, your immediate trend is a downtrend, and price can stall at the area and then still break right through and trigger a larger trend change. And this is why you need the trend change confirmation after the candlesticks form and react to the key level to show that the short-term downtrend is over and that the larger uptrend can continue. If only using one time frame, you wait and see if you get a momentum and follow through candle to form like this here, which shows that heavy buying presence has actually entered the market at the area of confluence. And then that is when you would take a long trade entry. So going in the opposite direction, a trend trade in a downtrend. Here is the anatomy of the variation. Now on the charts, clear moving downtrend through the lower highs and lower lows. This here is your area of confluence and where the trade opportunity presented itself. As price came back up to this level, you were looking for any of the candlestick patterns to form at the area of confluence. And in this case, you had an inverted long wick candle form, followed by a momentum candle, which shows a reaction to the level. This setup here allowed for a trend line to be placed like this. And once the trend line broke, the reversal is confirmed and you would then take a trade entry short. So one more example. This was a short trade entry on the Pinterest stock. During the recent market decline, we were strictly looking for short trade entries to trade with the bearish market sentiment. So you had your moving downtrend through the lower highs before a descending triangle pattern formed. Price then broke below the pattern, showing a trend continuation of the downtrend and bearish market sentiment. This here was your area of confluence and where the trade opportunity short occurred. As price pulled back up to this area of confluence, you had your long wick candle form, which shows a reaction to the area. Again, you either take a short trade after the bearish momentum candle, or the preferred method would be to look for an intraday trend change, an intraday entry short, using our entry strategy and tool. So next, a reversal trade in an uptrend. Here is the anatomy of the variation. So let's show this right on the charts. You have your key level of resistance because of this reversal point here. As price approached the level, you had shrinking candles showing a loss of momentum from the buyers, which you like to see, especially when trading counter trend. Once price hit the level, you had perfect multiple long wick candles, which shows that price tried over and over and over again to push through the level but failed, showing that the resistance level held strong and that it is valid this time around. You then needed a trend change confirmation, which you got in two parts. First, you had candles that were increasing in size, showing heavy bearish momentum had entered the market. And two, to cap it off, you had a momentum candle break through the trend line. All of this signals a confirmation of the reversal from an uptrend to a downtrend. At this point here is when you would take a trade entry short, so going in the opposite direction. A reversal trade in a downtrend. Here is the anatomy of the variation. Now on the charts, you have your key level of support because of these two reversal points here. As price reached the level, you had multiple long wick candles, including a very long wick candle. This setup here allowed for a trend line to be placed like this. Once you had your breakthrough and above here, the reversal is confirmed, and then that is when you would take a long trade entry. So next, a reversal continuation trade in an uptrend. Here is the anatomy of the variation. Now on the charts, you first had your moving uptrend before a double top formed, followed by a break of the neckline, confirming the reversal from an uptrend to a downtrend. So your traditional reversal entry took place up here, but this second entry here acts as another way to get into the reversal trade and is a more secure way to do so because price has already formed the lower low here and you would be riding the momentum of the fresh trend change. Now as price pulled back, you had multiple long wick candles react to the new level of resistance that formed. Trend line placed below like this, and once you had your break, the reversal is confirmed and you would then take a trade entry short. Now going in the opposite direction, a reversal continuation trade in a downtrend. Here is the anatomy of the variation. Now on the charts, you first had your moving downtrend before a double bottom formed, followed by a break of the neckline, confirming the reversal from a downtrend to an uptrend. Now as price pulled back, you had shrinking candles followed by a long wick candle. So in terms of the trend change confirmation, option 1, wait for a confirmation candle pattern, such as these candles increasing in size. But the issue is you are getting in all the way up here, which can be a bit late to the trade as it has already moved a bit. So how do we get around this problem? This leads us perfectly into our next topic, which is the usage of multi-timeframes, which allows you to find an intraday trend change right after you had the candlesticks form at your trade opportunity area. So let's get into it. Now, as a reminder, don't forget that there is a massive, highly detailed candlestick patterns trading guide that works in combination with this video that goes through a lot of content and detail that we don't have enough time to cover all in this video. Also, if you are enjoying this video and want to support our team, hit the like button, subscribe, and turn on the notifications bell so that you know exactly when new content is released. Now here's the core formula, combined with the use of multi-timeframes. And here are the core variations of the strategy. So starting with the first, which is a trend trade in an uptrend using multi-timeframes. So again, you had your uptrend and your trade opportunity long at this area of confluence here. You then had your multiple long wick candles reacting to the area of confluence. Now, the trend change confirmation came from this momentum candle here, meaning you wouldn't have been able to get into this trade long until after this momentum candle closed up here. And this is why you would want to use multi-timeframes, which is to get into this trade at an earlier entry point. Meaning, after you had the candlesticks form here, you would go to a lower intraday time frame and find price action that signals a trend change from a downtrend to an uptrend and get into this trade at an earlier point. So let's pull up a lower time frame and put it beside this one. The chart on the left is the 6-hour time frame we just looked at, meaning every candlestick represents 6 hours of time. The chart on the right is the same asset but using the 30-minute time frame, meaning every candlestick represents 30 minutes of time. Same key level, same pullback, same area of confluence. Now, notice how on the 30-minute time frame on the right, you can see so much more detail and can actually see the swings of price in comparison to the 6-hour time frame on the left. So again, after you had these long wick candles react to the area of confluence, you were looking for any form of price action that signaled a trend change from a downtrend to an uptrend. And in this case here, here's what you had. The double bottom form right at the key support level and inside of the long wick candles from the higher time frame. Trend line placed above, connecting the swing highs. Then once price broke through the trend line and formed a clear higher high with momentum, this confirms the reversal from a downtrend to an uptrend, and you would take a long entry on the same time frame or on an even lower time frame using our entry strategy and tool. So again, why are we using multi-timeframes? If you only used the higher time frame on the left, you got in at the top of this candle here, which is roughly right here on the lower time frame. Where in contrast, by using this lower time frame on the right for an entry, you were able to get into the trade down here, which is at an earlier point. So what are the benefits of getting in at an earlier point? 1. You were able to capture a larger portion of the move before the trend moves too far and starts suffering from trend exhaustion and potentially pulls back or reverses completely. And 2, an earlier entry point means more profit as you're capturing a larger portion of the move. So now, going in the opposite direction. A trend trade in a downtrend using multi-timeframes. So on the left is the 8-hour time frame. You had your moving downtrend and your short trade opportunity right here at the area of confluence. Once price pulled back to the area, you had a candle color change and one where the wick is sticking out. That's when you would look inside for a trend change and use a lower time frame such as the one on the right, which is the 2-hour time frame. Same key level, same pullback, same area of confluence. Again, we were looking inside of this candlestick pattern on the lower time frame for price action that signaled a trend change from an uptrend to a downtrend. And here's what you had. First, this can be viewed as a form of double top, which is a reversal pattern. Or if you work off of candle closes, this is a full trend change pattern, as you have your lower high and then your lower low, and combined with a bearish momentum candle, which all confirms the reversal, and is when you would start looking for trade entries short on the same time frame or through a lower time frame using our entry strategy. If you only used the higher time frame on the left, you wouldn't have started looking for short entries until this bearish momentum candle formed, which is roughly down here on the 2-hour time frame. In contrast, by using the lower 2-hour time frame to find an entry, you started looking for short entries up here, which is an earlier point and is a huge advantage. So next, a reversal trade in an uptrend using multi-timeframes. So on the left is the 6-hour time frame. You had your key level of resistance because of this reversal point here. And this is where your reversal trade opportunity short presented itself, and is where you had an inside bar pattern form at the key level. So then on the right is the 30-minute time frame that was used for an entry point. Same key level, same pullback. This area here is this same area here. Now on the 30-minute time frame, you can place a trend line like this due to the swings of price being visible, where you couldn't do that on the 6-hour time frame on the left. After the trend line was breached, you started looking for trade entries short in this area here, where if you only used the 6-hour time frame on the left, you wouldn't start looking for entries until after this bearish momentum candle closed here, which is roughly down here on the right lower time frame. So going in the opposite direction. a reversal trade in a downtrend using multi-timeframes. So on the left is the 4-hour time frame. You had your key level of support because of this reversal point. And this is where your reversal trade opportunity long presented itself. And it's where you had multiple long wick candles form at the level. So then on the right is the 1-hour time frame that was used for an entry point. Same key level, same pullback. This area here is this same area here. Now, if you use candle closes for your analysis, this is a lower low, whereas the RSI makes a higher low, which formed a divergence and is an early signal of a possible trend change from a downtrend to an uptrend. This can also be viewed as a double bottom, which is a reversal pattern. Neckline placed at the recent swing high here, and once price breaks above and makes a higher high, it confirms both the double bottom reversal and the divergence reversal, which makes this a higher quality trade. Again, if you only used the 4-hour time frame on the left for your entry, you wouldn't have started looking for long trades until after this bullish momentum candle closed up here, which is roughly up here on the lower time frame. In contrast, by using the lower 1-hour time frame, you started looking for long trades all the way down here, which is a huge advantage. So now, the final two types of entries. The reversal trade continuation entry in an uptrend using multi-timeframes, and the reversal trade continuation entry in a downtrend using multi-timeframes. These work the same like we previously showed you when using only one time frame, except now just apply the multi-time frame on top. We don't want to get too repetitive, so moving on to the next topic. Now, before we continue, we have a very important question we need you to answer. Do you prefer videos with a white background, like the one we are using in this video, or would you prefer a black background, like the ones we use in all our past videos? Comment below right now and tell us which background color you prefer. Also, if you're enjoying this video, please hit the like button, subscribe, and turn on the notifications bell so that you know exactly when we release new content. The last thing, make sure you go follow our Instagram account at WiseTrade to stay notified about a lot of big projects we have on the way. So what are false candles and false reversals? Let's break it down. You had your key level of support because of this reversal point. Once price reached the level, you had multiple very long wick candles form at the key support level, and you thought to yourself, this is a great long trade opportunity. I'm going to open a long trade right away and make a fortune. Then what happens? Price breaks through with momentum and you lose your money. This was a false reversal, also known as a fake out or a trap. So why does this happen? Amateur traders who don't wait for a trend change confirmation will enter right away after the candle patterns form at the level here. And they will often place their stop losses up tight and in this area here below the candle. If heavy selling presence then enters the market, whether it be regular or manipulated, all those stop losses placed close by below all get triggered at once, which results in all those long positions that were just opened at the level being closed all at once. This is what causes the heavy momentum candle to form right after, which is a result of all those premature long positions that were just opened at the level being no more. So how do we get around this problem? You should already know the answer by now. 1. Always wait and see if you get price action that signals an actual reversal of price. And 2. After the reversal is confirmed, you need to find an actual key entry point that maximizes gains and limits risk. So let's pull up a lower time frame, specifically the 1-hour time frame, to look inside of where the candlestick patterns formed here to show you how everyone got trapped. Now on the left is the 6-hour time frame we just looked at, and on the right is the same asset but the 1-hour time frame. Same key level, same downtrend. This area here where the candlesticks formed is this same area here. Now notice how on this lower time frame you had a perfect descending triangle pattern that formed. Price broke below the pattern, which is price action that signals a trend continuation of a downtrend. There was zero price action that signaled a reversal and zero price action that confirmed the long wick candles from the higher time frame, meaning there was no trade long. For you to consider a long trade entry against the strong downtrend, you would need two things. 1. A break above the pattern and a higher high, and 2. After you had the trend change confirmation, to go to the even lower time frames to identify a precision entry point that maximizes gains and limits risk. So let's show this again. This is the Twitter stock that we took multiple short trade entries on along the way down, starting from when the lower high here formed. But now, let's say you were considering looking for stocks to buy and adding to your portfolio at a discounted price during this market decline. Here's what you saw. You had clear, heavy bearish momentum without a green candle ever appearing, which is already a bad sign if looking for long positions, especially when going counter trend. You noticed this very key level here because of these two reversal points. When price reached the level, you had this small candle with the wick sticking out, which shows a reaction. Again, if you decided to automatically go long, you would have been trapped as price continued down. So let's pull up the daily time frame to look inside of the candle and why this long setup failed. On the left is the monthly time frame we just looked at, and on the right is the daily time frame. Same key level, same downtrend. This area here, where the candlestick formed, is this same area here. You had a descending triangle that then breaks below, which shows more bearish momentum and a continuation of the downtrend. Before even considering a counter trend entry against a very strong downtrend, you would have wanted things like a green candle to appear or multiple long wick candles to form on the higher monthly time frame on the left. Then a break above the pattern here and a higher high on the daily. And then, after all that, based on the price action setup, begin considering a long entry through the lower intraday timeframes. Also, as a bonus, for those trading with the moving downtrend, this here actually presented another short trade opportunity for you through the pullback to the broken pattern bottom. So one more example. This is the Coinbase stock. Now let's first establish what gave us our bearish bias, starting on the weekly time frame. You had your moving uptrend with all green candles before a red candle finally appears, which shows a loss of momentum from the buyers in the market. So let's pull up the daily time frame. So this area here on the Coinbase weekly time frame we just looked at is this same area here on the Coinbase daily time frame. You again had bearish price action through the lower high that formed and a lower low that formed, which represents a fully formed trend change from an uptrend to a downtrend. This is also a descending triangle pattern before price broke below, which is again a reversal pattern from an uptrend to a downtrend. So we were strictly looking for short trades to trade with this new bearish momentum. And one of many entries that we took along the way down occurred right here, where the long wick candle pulled back to the bottom of the descending triangle to the trend line, which presented a great short trade. Now back to the larger topic. Let's jump back to the weekly. Again, we established that we have bearish momentum. So figuratively speaking, let's say you are a value investor looking for stocks to buy to add to your portfolio at a discounted price during this market decline. You spotted this key support level here due to these multiple reaction points. As price reached the level, you had a green candle with the wick sticking out. Again, if you decided to automatically go long against the strong downtrend, simply because you had candlesticks at a key level, you would have been trapped as price continued down. So let's pull up the 4-hour time frame to look inside of these candles and why this long setup failed. On the left is the weekly time frame we just looked at, and on the right is the 4-hour time frame. Same key level, same downtrend. This area here, where the candlesticks formed, is this same area here. All you had on this time frame was your falling wedge, and without a break above, and without a break of the trend line, and without a higher high, there was no price action that signaled a reversal from a downtrend to an uptrend. Price instead gapped below the falling wedge and below the very key level, signaling a trend continuation down. Now, moving on to the most important topic of this video. Imperfect trades are when there are multiple key levels close together, which creates a zone, and you are taking a trade in the general zone and area. Let's break it down. So notice to the left, you would have two key levels drawn in, level 1 here and level 2 here. These are two very different and distinct key levels. And here's the problem. Since these levels are close by to each other, as price is approaching these levels, you are thinking to yourself, should I look for candlestick patterns at this first level, or should I look for candlestick patterns at the second level? Having multiple levels drawn in close by to each other can cause confusion and analysis paralysis. Now, to get around this problem, instead of drawing in multiple levels, what you do is you draw in a wide zone like this and treat the zone as a general area where you look for candlestick patterns to form within or around. This is very important. Candlesticks don't have to form exactly within the zone. They can form slightly past it as well. Because again, you are treating it as a general area where you are looking for candlestick patterns to form. So then, as price pulled back here and entered the zone, you had the long wick candle form inside of the wide zone and area, which shows a reaction. And that's why we call this an imperfect trade entry, because the candlestick pattern forms in the general area where key levels are stacked. So as always, we need a trend change confirmation. So let's pull up a lower time frame, specifically the 4-hour time frame, and put it beside this one. On the left is the 12-hour time frame we just looked at, and on the right is the 4-hour time frame of the same asset. Same key level, same downtrend. This area here is the same area here. Now, on this lower 4-hour time frame on the right, you had your trend line placed above, and once price breaks, this confirms the trend change from a downtrend to an uptrend, and you would start looking for trade entries long through the lower intraday time frames. So let's show this again. To the left, level 1 is here, level 2 is here. These are two very clear and distinct different key levels, but they are close by to one another. So again, instead of having two levels drawn in and causing paralysis and confusion, create a wide zone and look for candlestick patterns to form in that wide zone and area, followed by a trend change confirmation. So as price came into this area, here's what you had. Multiple long wick candles reacting to the area, and then a candle color change. So let's pull up a lower time frame, specifically the 30-minute time frame, and put it beside this one. On the left is the 2-hour time frame we just looked at, and on the right is the 30-minute time frame of the same asset. Same key level, same downtrend. This area here is this same area here. So inside of the candlesticks, you had a perfect symmetrical triangle form, and once price breaks above with bullish momentum, the trend change is confirmed and is when you would start looking for long trade entries through the even lower intraday timeframes. So next, to the left, you have your level 1 here and your level 2 here. Again, instead of having two separate levels, we remove them and create a zone. This is a very key area because price reacted to the area as both a support area and a resistance area. So as price entered the key area, here's what you had. A very long wick candle, and then a candle color change. So let's pull up a lower time frame, specifically the 30-minute time frame, and put it beside this one. On the left is the 4-hour time frame we just looked at, and on the right is the 30-minute time frame of the same asset, same key level, same uptrend. This area here is this same area here. So inside of the candlesticks, you could have viewed this as a head and shoulders pattern or a channel pattern. Regardless of which one you use, neckline and support line placed below, and once you had this bearish momentum candle break through, reversal confirmed, and then you would look for short trade entries through the even lower intraday timeframes. Now, here's a very key point about taking imperfect entries. You don't have to trade zones and imperfect trade entries. You can be a more conservative trader and only look for trade setups at a clear, distinct support and resistance level, which is perfectly fine. Our job is to provide you with all the tools, and you as a trader should pick and choose what works best for you based on your trading style and your risk tolerance. There is no right or wrong style of trading, as long as what you do makes you money. That's it. So one more example of an imperfect entry. To the left, level 1 here and level 2 here. This is clearly a very key level because it is an extreme swing high meaning the highest point that price has reached in recent time, and price reacted to the level every time price touched it without being able to push through. Now, this is a great example of why you are treating it as an area, because notice how price breaks slightly above. An amateur trader would then think this invalidates the short trade, where a more experienced trader, like you are now, knows that if you get an intraday trend change, this short trade is still on the table. Remember that you are looking for candlestick patterns to form in the general area. It doesn't have to be within the zone you created. It can go slightly past as well. This break above is also known as a false breakout, and amateur breakout traders all got trapped into long breakout trades. Now, as price entered the area, you had multiple candles with the wicks sticking out in both directions, which shows a reaction and indecision at the area. As always, we need a trend change confirmation. So let's pull up a lower time frame, specifically the 2-hour time frame, and put it beside this one. On the left is the 8-hour time frame we just looked at, and on the right is the 2-hour time frame of the same asset. Same key level, same uptrend. This area here is this same area here. So inside of the candlesticks, you had a perfect rising wedge form. Once price breaks below with a bearish momentum candle, trend change confirmed, and is when you would start looking for short trades through the even lower intraday timeframes. Now, while on the topic of imperfect trading and trading zones and areas, we want to show you something interesting that occurred on Bitcoin before it crashed. So, as you already know, Bitcoin and the crypto market as a whole has recently experienced a market dip. Before this reversal occurred, if you were watching the higher time frame levels, you would have noticed a few interesting things. So let's break it down. This is the Bitcoin monthly time frame. You had this very key level and area, so you would have had a zone drawn in like this. From our past videos, you should know that things you find on the higher time frames hold more weight, especially when found on the monthly time frame. The reason for this is because monthly price action and monthly key levels are very slow to form. So when they do form, or to be more specific, when they are visible and visually obvious on the monthly time frame, they represent very, very key levels to watch for. This area was also an all-time high area, which again shows how key this level and area is. As price came up to this level, you had multiple long wick candles reacting to the general key area and zone. Now, we're not saying you should have shorted Bitcoin, but if you were a holder who was running with a very large profit and with many large positions, whether directly through Bitcoin or a correlated crypto asset, this would be a good time to consider closing out positions to lock in profits and then wait for another possible future entry point. So the initial reversal here shows you roughly where a lot of whales initially took profit, causing the drastic dip. Then this second move back up to the all-time high price acted as a second chance for traders to close long positions, as now they know where the parameters of the playing field are. Now let's pull up the weekly time frame and put it beside this one. On the left is the Bitcoin monthly time frame we just looked at, and on the right is the Bitcoin weekly time frame. Same key level and area, same uptrend. This area here is this same area here. Again, notice how on the weekly time frame, price broke out slightly above, making this an imperfect area. If you didn't close out your positions based on the monthly time frame price action and monthly key levels, a second exit confirmation point would have been through the trendline break area here. Now, to be clear, no one could have predicted this drastic reversal here. In an alternate timeline within the multiverse, this could have ended up being a slight pullback and then price continued up and to the moon. But as traders and investors, your job isn't to only look for high quality entries and then hold those positions until the end of time. The other half of the job is to identify great areas to consider taking profit, to not only pull money out of the market, but also to limit risk exposure. Now, what we've covered today is only scratching the surface. On our website at wisetrade.com, we have a massive candlestick patterns master guide that is required to have in order to fully grasp all these concepts we have discussed in this video. It goes through things like exactly how to enter and exit trades, profit targets, stop loss placement, and stop loss management, how to manage winning positions, scaling into winning positions, scaling out of winning positions, and so much more we cannot cover all in this video as it would be way too long. So again, go to wisetrade.com to get access to everything right away. Now again, we need the answer to this question right now. Do you prefer videos with a white background, like the one you saw today, or do you prefer videos with a black background, like the one we used in all our past videos? Tell us in the comments below right now. Also, if you enjoyed this video and found it helpful and want to support our team, please hit the like button, subscribe, and turn on the notifications bell so that you know exactly when we release new content. The last thing, make sure to go follow us on our Instagram account @wisetrade to stay notified about a lot of big projects we have on the way. So thanks for watching, and I'll see you in the next episode.